Hey, hey, hey. Thanks for tuning in to Fintech Quotient. I am Ronak Demla, your guide through India's vibrant fintech scene. From the hustle and bustle of Mumbai to tech parks in Bengaluru and swanky offices in Delhi, we will explore the stories of entrepreneurs shaping the future of fintech. Whether you're an industry veteran or new to the fintech world, we've got something for you. Let's get started with today's episode of Fintech Quotient's Spotlight series. This podcast is powered by Pixel and Pros, the one-stop solution for all your premium digital marketing needs. Hey everybody, Ronak from the future here. I just wanted to come in and let you know that when we recorded this episode with Nishchay, his company was called Leafround. However, during the course of the editing, they have rebranded to Tap Invest. So every time you hear us refer to the company as Leafround, please keep in mind that they are now called Tap Invest. Thank you and enjoy the episode. Hey everybody, today we are in conversation with Nishchay, the founder of Leafround. It's been a pleasure having interacted with you over the last couple of months, Nishchay, and having seen your journey. It's been always interesting to see the way you've grown. I've definitely seen the platform evolve since the first time we met to where it is today. And I was going through the website last night to prepare for this episode. And it's super interesting, the kind of opportunities that you're providing to the users. So I would love to do a deep dive on what you guys are doing at Leafround. Before that, let's get started with a quick introduction about yourself.
Thanks, Ronak, for having me here. Hi, everyone. This is Nishchay. I am the founder and CEO of Leafround. We started about a year and a half back to solve for making fixed income investment products accessible to retail India. Well, that was not the problem statement we initially started with. We believed that alternative asset classes would be the opportunity for us to target. But eventually we figured that fixed income is the area to solve for. That's the area where the market is much more ready and mature for. And we started operating in that particular space. Today, we are a team of 30 based in Bangalore, working on democratizing access to fixed income investment products. And yeah, happy to share my journey on this podcast.
Awesome. Thank you. Thanks for that introduction, Nishchay. So it's pretty interesting, the part that you mentioned where you started off as an alternative investments platform and then you've morphed into a fixed income. So let's break those two terms down. Can you help us define what is alternative investments? What all does that include, and what is fixed income and what is that?
Sure. I think I want to take a step back from here and possibly touch upon what exactly a startup means, right? A startup, in my view, is nothing but an experiment or a series of experiments that you run in an attempt to prove or disprove a hypothesis. And while doing so, you end up building a company out of it. And by building a company is where, say, the big boys eventually step in, those Ps and companies running to do their IPOs and all, right? Initially, it's the angels who give you the fire under your wings or the wind under your wings, right? Yeah. And then it's the VCs who see true potential in your proof of concept and give you that, give you much more firepower, much more fuel to bring that business to a particular level and take that behavior or a proven hypothesis into a proven business. I mean, that's the journey that we're going through. So we started. There were a couple of things that we had seen. We had approached this particular problem more from an opportunity lens as to where exactly. I was quite excited by the investments and the insurance space, have my thesis about both of them. Investments was much more closer to heart and an area where both me and Soumya had experience in, which is where we decided to kind of go a little deeper into, and we figured that products which were different than the traditional investment products, such as, say, stocks, bonds, and cash, were the areas where an opportunity would lie. And that in entirety is classified as alternative investments. And we started building asset leasing as an investment class because we saw in the market that a mix of an alternative asset class, but holding some remnants from a traditional asset class, like say having a fixed income behavior to it, right? Or a timely or a monthly frequent repayment is happening on an ongoing basis. These were the reasons why we picked up asset leasing as an asset class, but we were doing alternative asset classes.
Okay.
While doing so, we figured that maybe alternative classes is an area which will require a significant amount of awareness building, a bit of work to be done with respect to educating the users, finding those right forms of influencers, not influencers in the traditional sense of the word, right? But you and I have that one friend in our circle who is known for investments, right? And possibly you and I are those in our circles. So we had to educate and find those people. Through this journey, when we started a year and a half back, we figured that another learning that we had was that people don't choose a single product.
Okay.
They choose the person or the company that they're working with. For example, I am today, if I'm using either a Grow or a Zerodha, I'm choosing them and not the stock itself. I'm not choosing to invest in a particular stock and hence the platform. I'm choosing the platform and then the stock, which brought us to the, we kind of ended up realizing that possibly picking a single product may not be the right approach in the investment space, in the space that we were working in. And we had to move into an arena wherein we had to add multiple products and become a platform which solved a problem and not a product. So the product was not what we were selling, but the problem that we were solving for, which is where we again went to the drawing board while things were in flight as a typical startup, right? I mean, you're always in the mode of iterating. And that was our moment of pivot in a form, right? Where we kind of went to the drawing board, figured that fixed income as a behavior was something very innate or very comfortable to Indian investors. To put things like looking at certain facts, right? India has, we save 28% on average of our income, of which 95% is preferred to invest in FDs as a product. We're making $150 billion worth of FDs a year and are sitting at almost a $2 trillion FD base today. What happens is that it's a choice made out of desperation. Because when you look at the finance space, us finance folks tend to complicate investment products quite a bit, right?
Yes.
So we have to, so simple products are what we end up gravitating towards. And we end up making the choice of investing in an FD-like kind of a product. So end of the day, what happens is we figured that fixed nature or the income nature of the products were the key characteristics of what investors wanted. And hence we decided that, hey, let's solve for this. We saw that the market was huge. Fixed income as a market is huge and divided between the incumbents. Somebody is doing FD, somebody is doing bonds, somebody is doing X, Y, Z, right? 1, simplification is required. 2, digitization is required. 3, a startup can do it. And which is where we moved into the fixed income as a category.
Got it.
Away from alternative investments. So in an elaborated way, that's the difference between an alternative and a fixed income kind of a product.
Interesting.
Yeah.
While I was doing research about this podcast or this episode, I Googled 2 things, right? I just wanted to understand what is the pie that you're running behind, right? So I'll quote a couple of stats that I picked up. So we are recording this episode as of end of August. But about 2-3 weeks ago, we realized that there are totally 6.8 crore SIP accounts in India, which is probably 4% or 3.5 to 4% of India's overall population. The total amount of SIP inflows per month is right now at 15,200 crores a month. Now you contrast this with FD data, which is going to blow your mind. this is value coming from January of this year. So it stands at 164 lakh crores. And it just goes to prove your point that people want simple, accessible investments that they understand. There's no complexity. They're like, acha, theek hai. Put 5,000 rupees here. It's going to give you, let's say, 5% returns. You know that you're going to get access to it whenever you want. It's in the bank. It's safe. I think that speaks and connects very deeply to the large part of the population in India. So with these stats in mind, what is the kind of market that you're going after? So who would be a typical ideal customer for you, and where do they come from?
Okay. So there is a customer that we have in mind who is that, say that FD customer who we want to give multiple options to. That's the eventual end game that we are targeting, because as you rightly mentioned, the FD penetration levels or the size of the market is immense. It's huge, right? But we need to start somewhere. Coming back to the previous point which I had raised upon the presence of influencers, given the kind of society that we are, right, and we don't have much information. We rely a lot on concentrated information with a select set of people, and end up making our choices. For example, I made the mistake, or in certain ways I made a mistake of investing in an LIC endowment policy early on, which was primarily driven by my family's decision making. My entry into, say, stock market or even cryptos I had explored at a point of time was because I found a couple of friends who influenced me into exploring those products. There is an element of influence which is always involved in getting started with an investment product. And hence, we've chosen a TG also accordingly. We are currently targeting, so currently if I were to put it this way, we are targeting affluent customers who are exposed to other fixed income or alternative investment products, because these are the ones who can classify themselves, who would want to call themselves as innovators in that innovation spectrum, in that product or that adoption spectrum, right? And we are trying to target those folks so that they, end of the day, become our influencers in their own circles.
Got it.
Eventually would want to target the folks who have exposure to the stock markets, because even in the stock markets there's a journey which a customer goes through. We've 3x'd our equity market base in terms of number of users, right, in the last 3 years, and that itself is an opportunity to play out in the next 5 years, where we would see the second wave of, say, fixed income investors coming into the space. And then eventually 10 years down the line, that FD customer base is the one that we are targeting and gunning for. And that's how we're looking at the market.
Yeah. So in case you missed it, the market size that they're going behind is 164 lakh crore. If that is not exciting and mind blowing, I don't know what is. So moving forward, right? Nishchay, why don't you run us through what is the platform like? What all do you offer today? So if I were to land up as an investor today, let's say with 5,000, can I invest? Or why don't you just take us through that journey? So I'm an investor, I want to invest on your platform. What all can we do?
Okay. So currently we are live with 3 products. We have asset leasing, invoice discounting, and for bonds, we act as brokers to existing some of the license holders.
Okay.
So, which does have a little bit of a ticket size constraint over there. With respect to asset leasing, so once you sign up, you complete your KYC, you can access the deals on the platform. In case of asset leasing, simply go on to the specific deal, choose the assets that you're looking to purchase and lease it out to a corporate, and it's a seamless kind of a transaction to get into a rental agreement, and that's it. It's as simple as purchasing something on Amazon and entering into a rental agreement.
Okay.
In case of invoice discounting, you can either purchase a part of the invoice or the whole invoice itself, and you end up getting a margin on top of that. Generally, we deliver like a 12 to 14% in case of invoice discounting. In case of asset leasing, we deliver somewhere in the 18 to 20% range.
Okay.
Bonds is a separate ballgame altogether. In that, we are in the process of productizing and getting the requisite licenses for ourselves so that we can do it on our own as well. But in the interim, we are working with a lot of partners on that front. So on a case-to-case basis, we can send across the available bonds to you. And we have a very proactive investment concierge of sorts. So they'd be more than happy to help you get started on that. Apart from this, we have a few more exciting products coming up fairly soon. Maybe by the launch of this podcast, we would have launched them as well. We'll keep you updated on that, and you'll definitely hear about it in the news as well. But yeah, along the fixed income lines, there are some new products upcoming. We also understand our product has to become much more simpler. And there are certain, I'm just leaving a few hints here and there with respect to what we're launching. But we do have some exciting products coming up.
Interesting.
Yeah.
So what is the lowest ticket size an investor can start with?
So so we run a Kickstarter program with respect to invoice discounting. The lowest ticket is 5,000 rupees for the first 3 investments that you make.
Interesting.
And in case of asset leasing, the lowest ticket size is 20,000.
Interesting.
Yeah.
So essentially, the way I'm looking at it is you have the concierge that helps you to pick out the right investment opportunity for each investor.
No. So we don't... we help users understand the product.
Okay.
End of the day, it's as per the user's comfort to pick up the product and make that investment decision.
Got it.
We also have worked with a lot of wealth managers as well, who can help you in making those decisions. But then we will have to attach you with the wealth manager in that case.
Sure. So you provide the information.
Yes.
You're trying to reduce the, let's say, the information gap or information asymmetry and allow or enable your customers to take the right decision for them.
Correct.
And you have the options available on the platform, so anybody who wants to come in can come in and invest. Great. So what's the supply side like for you? I think the demand side is pretty clear.
Yeah.
I think just to add a further point there, anybody who's already doing SIPs, FDs can come in and start sampling these investments because the ticket size is as low as 5,000 rupees, right?
Yeah.
And what's the maturity or the term for these?
So these invoice discounting deals are in the 30 to 90 day range. Your the time period in which you are able to realize or exit from the investment is quite low, and it also allows us to prove the product faster. But 30 to 90 days you can choose.
So time period of an FD, but in terms of returns, nothing close to what an FD can even reach ever. Nice. What's your supply side like?
So on the supply side, right? The way we do specifically so bond is quite straightforward. Bonds, we source it from the respective brokers itself, and we further channel it. On the asset leasing and invoice discounting front, it's a product that we've built in-house. For this, we have to get the company on board. We evaluate those companies. We do a proper risk evaluation of the companies. In case of asset leasing, we even do an asset level understanding. In case of invoice discounting, we take the anchor in question. On that front, currently we're working with 50 companies. We have a fairly large pipeline of companies in place, but we're selectively bringing them on board to be able to understand which customer, how are they picked up by our investors, right? And we have companies ranging from SMEs to large corporates. We have even certain startups are there on the platform of large scale profitable ones. We have, interestingly, almost 80% of the startups on our platform are profitable today.
Right.
And we've been quite slow as per the market, but that's allowed us to be much more careful as well, right? So that's been more of a conscious call. But end of the day, we pick and choose the right type of companies, structure deals for them. Because the way we see it is that financing and investing are two sides of the same coin.
Correct.
For one, it's a financing instrument. For the other, it's an investment product, right? So we have a good, we have an emerging demand in place, and supply is something that we have quite adequate as well.
Got it. So on the invoice discounting side, do you operate in a top-down manner where you capture, let's say, an anchor or a major client and you onboard their vendors who've raised invoices to them?
We do it both ways.
Okay.
So we pick anchors, so maybe a large conglomerate, and then we do say invoice discounting for their suppliers.
Got it.
Or we pick up some large, like an SME or a well-established business, and then do invoice discounting for the invoices they raise on a rated anchor.
Got it. So in that case, I'm assuming that your vetting process is going to be a lot stricter and a lot more thorough if you're going down the SME to customer route.
Yes. So there, at this point of time, we are not just using our own risk algorithm that we've built, but we're also using the standard risk reports, which some of these the reporting providers do it for the banks and NBFCs. We work very closely with them to get these two reports in place.
So as an investor, probably my question to you would be, is this research that you're doing to onboard SMEs on the platform, is this publicly available for investors in our platform?
So I would say that to protect the confidential information of the company, certain portions of the risk report are masked, and then these details are shared with the investors.
Got it.
And on request with respect to specific large ticket deals, we do provide this particular information but then we have to involve the company because it's the company's information end of the day.
Yes.
So we have to take the consent before we share any such information.
Yeah, that's pretty interesting.
Yeah.
The next question that I had was, in the invoice discounting space, if let's say there is a default by, let's say, an anchor, is there any recourse to these investors who've funded these who've discounted these invoices?
Right. So default can happen at, say, two levels. One, either the supplier can default in making the repayment, or the anchor is defaulting on making the repayment. In either of the two cases, the first level of liability lies on the supplier. In the current model that we are in, it lies on the supplier itself. So we have recourse mechanisms in which we set up provisions with respect to invoking IBC, to being able to set up say a board level committee, so on and so forth. And we have the support of a SEBI registered trustee to take those actions on our behalf. At a second level, we can do it with the anchor as itself, but with anchor, we can go ahead only with the recovery processes, not with the other certain provisions. So we have much stronger teeth when it comes to the supplier itself, while from the anchor, there is the entire collections or the recovery mechanisms that have been set up in place. So at two levels, the liabilities exists, right? From a mechanism perspective, number one, we have the support of a proper trusteeship in place.
Right.
Two, we have our own internal legal counsel. Three, we also have our own collections teams. And I come from a family business, 25 years. I've seen how collections has happened there. Plus, I worked in a bank where during COVID, we had to not just restructure, but even do collections, right? At a time when portfolios were at almost like 30-40% stressed, but we still had those collection mechanisms in place. So across the board, we have the requisite experience as well as the right partners to be able to help us with the collections process.
Yeah, that's interesting. I mean, I hope we never have to use these mechanisms in place. Yeah. But it's always reassuring to know that you have these safeguards in place so that your investors are protected.
Yes.
Makes sense, yeah. Makes sense. So I think before we just move into the next segment, we used a couple of terms and jargon in the previous segment. Let's just break it down. I think if you could just explain who's an anchor and give an example, and the SME and all of that. If you can just give an example of the flow, our listeners will be able to connect it much better.
Got it. So let's take say if there's a company called Agreezy. procure from farmers. They procure wheat, rice, and etc. Food produce, agricultural produce from farmers, process it, and then further supply it to some of the larger conglomerates, say ITC or Godrej Agrovet in this case. So Agrizi is the supplier who is supplying, say, wheat to Godrej Agrovet, and Godrej Agrovet would be the anchor in this case. So Godrej is the anchor, and Agrizi is the SME or the supplier in this case.
So the anchor is buying something from the supplier?
Yes.
And the supplier is the SME that we are talking about here?
Yes.
Sure. Cool. Thanks for that, yeah. I just wanted to quickly tie back to one thing that we've briefly touched upon when you spoke earlier. That is, what is the opportunity that you saw and what made you really decide that, hey, this is a problem that I want to dedicate a large chunk of my life to solve, and what really motivated you to get going?
Okay. I think we've already touched upon how large, say, the fixed income or the FD space is, right? And even being able to capture 1% or 2% of it would allow me to build a sizable business. That's what excites me today, and that's what pushed me into taking a plunge and start building in this space and dedicate my career to it.
Awesome. So I think, how long have you been running LeafRound as of today?
It's been almost 1 year, 8 months that we've been building.
Got it. So typically in the last, let's say 20 months, I'm sure there might have been a few missteps or a couple of mistakes that you would have made as a founder, CEO or operator. So would you be so open to talk to us about what those mistakes were, or what have you learned from those, so that other founders listening to this podcast can avoid making those mistakes?
Sure. I think I would say there are quite a few of them. Some of them, on a day-to-day basis, you can sometimes count as to how many mistakes we're making.
Right.
End of the day, there are mistakes that we know of and mistakes that we don't.
Right.
The ones which we know, a couple of them we've corrected, couple of them we are in the process of correcting, and that's what this journey is all about, right? And we are able to do it in our own particular way. I think there are two areas in which I would categorize these mistakes into, right? One is at a business level. Second is at a people level. Okay. I think these are the two core things, and business is the thing that we're building, right? But people are the ones who are building building the business end of the day. So let me touch upon the business first, because that's the easier, relatively easier thing to touch upon. With respect to business, I think we learned that we needed to take a lot of feedback, right? Especially in an area where we are creating a category. We need to take in a lot of feedback from investors who are, say, using the platform, but also the investors who are wanting to back us. Okay. Because, so from the customers, it's quite, we need to work and build for them, because at the end of the day, they have to use it. While we have our own visions, but they have to end up using it. Their journeys have to be frictionless and so on and so forth. So we need to build that, we need to factor their feedback in. On the other hand, it's the feedback from the investor community, which are, say, for example, the angels, or the ones who are going to back us, right? Because we are running a startup, we are running an experiment of sorts, wherein we are trying to prove the size of a market and a hypothesis, and we need to get these guys onto our side as well. So we need to keep understanding from them, and I figured that the investment community, VCs, angels, founders, everybody, they're quite open to sharing feedback and working with us, right? Because end of the day, they themselves are looking for those prized horses that they can back and end up making a bet on. And it's more of a collaborative effort. And initial days as a founder, we used to treat, there's always this one Chinese wall which you operate with respect to dealing with investors. But they are more than willing, and they're quite enthused to help us out as well. So taking in a lot of feedback from investors, keeping the regular contact in place, that takes things a very long way. They open doors
Right.
for us and a lot of things. I think those are certain things that we learned with time, and now I'm using it to my benefit as well.
That's good.
On the business front, couple of other things. I think as founders, there are certain limitations that we have to our skill sets, right? Especially if you are a founder with lesser experience, there is the experience gap where founder market fit would be questioned end of the day.
Correct.
There we need to be open to the idea of seeking what is beyond us, right? For example, if I were to think about product, none of the three founders come from a product experience,
Right.
but we are a seed stage company wanting to become a Series A or Series B and scale up in the future. So I have to be in touch with a Series B or a C stage, say a CPO, to understand from them as to how did they take the company from seed to Series B, C, right? That ability to seek the right form of advice, right form of stakeholders in the and get their advice, mentorship in place. That was a critical piece in the business, and we've been able to plug in a lot of gaps internally as a team. I think those have been on the business front. I'll get to the more interesting piece, which is the people front, right? I think the first 50 that we are hiring, we're still at the 30 mark.
Yeah.
But we've realized that we need to show them what the true picture is.
Okay.
Not just the fancy and the snazzy, right? That's what we used to lure or bait folks into the startup space itself, right? But you're working in, you've gone through that journey yourself. The true picture is not that, right?
Yes.
There's the expectations that people bring from corporate into a startup. Especially for those folks, you need to, your work-life boundary starts fizzling out.
Correct.
Responsibility span 24/7. That's the nature of the job, right? Things are not easy. We when we started, we didn't know a funding winter would be coming in. And the entire team had to stick together to brave through it. You need to show people the true picture as to what would it really, really involve, right? I think that's what it truly means to work at a startup is something which I learned needs to be shared with your people.
Correct.
Upfront. Apart from that, I think when we started, we came from corporate, but I realized that the ability to keep brandishing your vision, mission, and values is heavily underrated. We shy away from doing so because previously we used to be in that mode, right, where we never really celebrated it in our previous areas or wherever we worked in, right? A couple of us did. I had that personal experience.
Okay.
But here, what we realize is people always need to know what exactly are they chasing, right? Else they start drifting apart. Founders have to be extremely bold with respect to holding the vision, mission, and the values together and keep celebrating those from time to time.
Absolutely.
And just don't shy away from that. That's something which I learned, was a piece which I learned through this experience. Yeah, so those were some of the pieces, and I can keep talking about the people problem. It keeps going on and on. But those are some of those.
It's a very dynamic part of the business.
Yes.
Right? And you attract various kinds of people at different segments of the journey. Personally, having seen the journey with Decentro, we are about 3.5 years old today. And looking back at some of the people who joined us, I wonder what were they thinking or what were they expecting? Because you have people who are giving it their all. It's a very high ownership game. And then you have people who just want to do the bare minimum to get by. And sometimes you can't sense it with interviews, right? You can't really judge a person's work ethic and stuff like that. So people management is obviously
I think I figured one thing out there. Do the interview, do a couple of interviews, and then eventually go and go out for a tea or a coffee with the person, right? And maybe do it a couple of times. If it's a senior role, then you have to do it a couple of times. I think that's where people start opening up. Especially for the senior roles, you have to do that.
And those are much higher impact on the organization.
Yes.
Because like if you're a junior person, relatively less than 5 years of experience, you see somebody coming in with 10, 12 years of experience and leave in 2 months. Like, what has he seen that I'm not seeing? Right? It starts planting a lot of questions in people's mind. But let me share a very interesting part of my journey. Back in 2018, there was this startup that I really wanted to be a part of. I went in and did an interview. It went as bad as possible. Needless to say, I didn't get selected, but I was very keen on working for that company. So I wrote to the founder. I said, dude, I don't know what you guys are doing. They have no idea how to handle an interview, but I really want to be a part of your company. So how do we figure this out? So what I ended up doing was I worked with them, no strings attached, for I think a week or 10 days. And in that journey, I don't know how they gave me that power, but I ended up shutting down one entire business vertical of theirs because it made absolutely no sense to me. But then kind of that allowed the founder to look at how I would operate. It allowed me to kind of get a sense of what the company is like, and I ended up spending nearly 2 years with that company. Grew, and seeing what I did in the first 10 days, I actually did 3 or 4 shifts within the company to solve different problems. So it was a good experience, but that was something that is unconventional, but it worked. I think the one thing that I'm definitely able to sense from the conversation that we've had so far, Nishchay, is as the founder or operator, you seem to be a very self-aware person who's very keenly tuned into multiple sources of information flowing from different parts of the ecosystem for you to be able to really understand what do you do, right? How do you take a next step? So does that also translate into the kind of founder or manager that you are? Very understanding, people friendly, people first founder? Is that reality in terms of, this is the picture I have painted in my mind.
Right. I mean, if my folks are listening, they'll agree to a part of it. I do believe that I do weigh in a lot of opinions, but then end of the day, you have to lead with an iron hand, right? So that's a piece. Have to be quite decisive in a lot of areas. Yeah. But yes, I'm extremely open to feedback, and I try to empathize and put myself in the shoes of especially the people. I mean, these guys have they had other options. They've made me responsible for their careers, and I have some brilliant folks with me, and I want to maximize the output for outcome of all of this for them end of the day, right? So I mean, that's how I look at it.
And I think the beauty about the stage at which you're operating right now is that you can actually do that, right? So it allows you the freedom to do it. And it's good to see that happen. So I mean, one quick question before we go into the next segment, Nishchay. So like we both agreed, I think you're getting a lot of information. There's a lot of signal coming to you. How do you decide what to do with so much inputs coming in your way? What is relevant for you? How do you, what are the models you use to take a decision? So how would your mind work in that situation?
Right. I think I've outlined these. I have some 13 principles in place. Those are some core values to me, which have helped me in my life, in my career, in different stages, and they continue to help me. So I use that as my guiding principles to evaluate or to act accordingly. While I get in a lot of feedback, and while getting feedback is great, it's confusing at the same time. So I have my 13 principles in place, which allows me to kind of evaluate everything against it.
Got it. Cool. Yeah, I think let's touch upon a little bit more as an operator. What are some hacks or pro tips that you've discovered really work, or what's something that's really blown your mind in terms of how powerful it's been? This would be something that a lot of other listeners who could be founders, operators, product folks really take away from this podcast.
Okay. So I think I heard someone talk about, I've never found it properly, but it's called as the entrepreneur's bias, right? It has two parts to it. One, the problem you're solving for is not significant, is not the right problem.
Right.
And two,
Right.
you're not the right person to solve it.
Correct.
These two are very important pieces of an entrepreneur's bias, right? The part of you solving the wrong problem, right? And in that attempt, you try to understand from the market, you try to understand from different stakeholders, your customers, if they really need that solution, you end up becoming much more confident in what you're solving, right? So getting that strength in the belief by continuing to question yourself about the problem, that has helped me significantly in keeping my bearing straight. Second piece of are you the right person to solve it? That allows you to build a lot of one, redundancies, two, skill set that you don't have. So you're not, as an operator, you're not supposed to solve everything. You have to end up trusting and letting go of things. Otherwise, you will become the bottleneck end of the day. I don't know how, say, inorganic marketing works. I've not done that in the past. So I have an excellent operator. I found that from the market and got him on board, and so on and so forth. So you need to be able to understand where exactly as an operator you are strong in, create a redundancy for that, and where you're not strong in, and find the right set of resources for that. Apart from this, I saw there was a promo campaign by Ultra Human where Pratik Poddar from Nexus talks about you can only improve what you can measure, right? That's something which stuck with me, has helped me immensely, right? I mean, if you keep seeing those numbers every day, you'll end up chasing them and you'll end up thinking about them. And lastly, as a founder or in a startup, even for folks who are working as a part of the founding team or the early 50, you have to go all in. This is the only chance you have. Every day you need to make it count. When I go back home, I need to be able to tell myself that, hey, this was this one thing that I was able to do. And especially on the days which are hard, right? I mean, if the day is easy, it's easier to do. But on the days when it is tough, to be able to pull yourself out of that and be able to deliver, I mean, that's true value add end of the day. So just need to keep reminding yourself of that.
Yeah, it's also what I'm able to observe, and what's very interesting for me as an observer here is how a lot of what you're saying is actually very connected, right? So you earlier touched upon saying that, hey, as a founder, you have to rally your troops, you have to tell them about the vision and mission every day, and you have to tell them this is the progress we've made, and essentially it ties back to you can't improve what you can't measure, right? So ultimately just giving them that, boss, dekho, you've come 30% of the way to your target, here you go, this is what you need to do to achieve the remaining 70%.
Yeah, absolutely. I mean, it's all you're all pulling each other up, right? And that's what makes a startup journey quite beautiful. Yeah. It is stressful, yes, but the kind of folks you're working with and the kind of effort you put in, I mean, that's magical end of the day. Yeah.
No, it makes a lot of sense. I think I really want to also call out one thing. This is something that we do in our town halls at Decentro, and Rohit is a tremendous founder that I've learned from. One point that he mentions, and this is there in all the slides, and we've actually implemented it, and that's the beautiful part about it. It's very simple, radical truth and honesty. So, I think, to wrap up this episode, Nishchay, is there anything that you would like to add? I have a couple of more questions, but I just want to give you this opportunity if you wanting to add something.
No, nothing per se. I think we've fairly covered quite a bit. If a founder operator is listening to this, right, there are different things that you'll take away, but end of the day, I'll just suggest to keep an open mind. That's helped me tremendously in listening and moving and maneuvering. Right. And I come from that perspective, so I can possibly just share more light on that.
Awesome. So want to make it a little bit controversial right now. So you're an IIT, IIM, very typical template guy of, hey, this is the guy who's going to take away your job. So is there any mental frameworks that you use to take decisions, or is there any hack that you use that you want to share with people, typically coming from your background, because you've IIM followed by investments. So what's the superpower that you picked up there that could be helpful for everybody else?
Okay. I think I've picked up a couple of things from across the places, right? And even my core principles are heavily inspired from the places that I've shaped myself in, right? One thing in, say for example, IMA prides itself in is that is that deadlines are sacrosanct, which translates into a whole range of things, right? You make commitments, you see them through. It talks about ownership. It talks about how you take charge of things and you own them, right? The second thing which worked, as a mental model which works for me, is that is the idea of a collective responsibility. So when I'm working with someone, right, or if I'm working on a problem, if I'm working with you, if I'm working with a client, with a supplier, I have a responsibility to the collective, to my collective and to that collective as well, which allows me to empathize, which allows me to, for example, if something is going wrong, it's my responsibility to correct it. It's my responsibility to own it and to be able to solve it, not just critique it, right? I have to solve it end of the day as well, because we have a lot of traffic signals everywhere, right? But we need problem solvers end of the day. But from a mental model perspective, two things which Jeff Bezos kind of talks about. One is that 10,000 year clock that he has, right? Which talks about you building timeless things, right? And when you're building, you just think about how could it survive the test of time, and why do you want? How would it look like 10,000 years from now? And then do it today, in that particular way, not just hacky, not accumulating tech debt and so on and so forth, right? You have to think about what exactly would it look like 10,000 years from now. The second thing is, personally, at a personal level, the way I took a decision was with regards to the regret minimization of sorts, right? As to, by taking this particular choice, or there were multiple paths in front of me, where would I be least sad, right? And I figured that this would be a path where, while walking on that path, and even where I end up, everywhere I would be able to minimize my regret and end up maximizing my outcome end of the day. So that has worked well for me.
Nice. Spoken like a true leader, I must say. Awesome. So we are now in the era of generative AI and everything AI. So I would have asked you, what book do you read? More than, or what's your favorite book? What are you reading right now? You're more than welcome to answer that as well. But I want to ask you, has there been any tool that you've discovered that's been like radically improving your productivity? How you stay organized? Or is there any tool that you want to really call out and give a shout out to?
Okay. I think there are a lot of tools, but personally, which I really like is writing. Writing down with a piece of paper, end of the day, being able to synthesize my entire day in a single place without a screen. That's the single biggest, I would say, moment of peace, as well as a moment of consolidating the entire day, right? Because it's so open every day. So I take a break from technology in that way. But at work, if I were to talk about, we extensively use GPT. We have trained our internal support tool on a QA-based GPT, and it's insane. We've put in all our transcripts, we've put in all our and transcribing is so easy nowadays, right? All our transcripts, all our support queries, all our FAQs, everything in a single place, right? And build the QA model on top of that, which allows us to get very context-specific, precise answers. So such tools we've implemented. Our querying is happening through, like, our DB querying, our say the reporting that we're building, right? We're spinning it out of GPT today, right? And there are such implementations that we are doing across the board for a lot of things. So Yeah, but at a personal level, I prefer a pen and paper.
So there's no Notion second brain going on for you.
Yeah, nothing.
Awesome. Yeah, I think a very eye-opening conversation for me because it's you talk to people and then you get to know people, and both are very different things. So today I've had the opportunity to get to know you, and really, really happy with the kind of takeaways that both listeners and I am taking away from this episode. So yeah, I think thank you so much for the time and being so open and telling us about your journey and what you've learned so far. And we really are rooting for you and Leafon, and we want to see you capture a large chunk of that FD pie, and let's have a feast on the FD pie.
Yes, thanks, Ronak. Loved putting my viewpoints across, and happy that you're doing this. Hopefully it helps a lot of folks in the ecosystem, and looking forward to doing more of these.
Yeah, absolutely.
Yeah.
Thank you so much.
Yep, thanks.
And that's a wrap for this episode of Fintech Quotient's Spotlight. Do share your feedback, thoughts, ideas, and even your fintech stories with me. Your feedback will help us to do better. Our social media handles are plugged in the description below. If you enjoyed listening to this episode, don't keep it to yourself. Spread the fintech fever by sharing this podcast with your friends, colleagues, and anyone passionate about fintech. Until next time, keep those insights flowing, and let's build the future of fintech together.